final one, and this is a complicated one before we go to break. The NewFunds Government Bond ETF. So this is one of Absa's units. It has the code on the market NFGOVI or GOVI. And it tracks the government index on a roll-up basis. So in other words, it's government bonds here. We're talking about issued by the South African government, but it's a total return index. It's got aggregate market in issue of around 400 million rand. But explain that to us, Nerina. So this is the thing again where you don't actually get paid the money.
Yes.
They use the proceeds of payouts to buy you more units.
Indeed, that's exactly how a roll-up fund works. So the ETF tracks the total return index,
Yes.
and in practice how they manage it is every 6 months when there are coupons or interest paid from these underlying bonds, they use it to buy more underlying bonds, thereby so your number of units that you own of the ETF don't increase, but the net asset value of the ETF that you own increases by a proportionate amount.
So that's quite a lot of work for Absa,
Yes.
one would imagine, in the background. But why would you want to own these? Is this, I mean, what's going on with bonds? Remind me again, because I spent all day every day talking and thinking about equities, and I couldn't be bothered really about the bond market. What's going on over there? Have we got, like, with this prospect of a bond, sovereign bond credit rating change?
Yes.
I mean, what's the latest on all of that?
So what we saw in December was a massive knock to our bond market because of what happened in December with musical chairs with the finance minister. We've seen quite a bit of a recovery in the bond market because of that. Now, there's a lot of commentators that are saying that they believe that the investment grade downgrade is priced into our bond market. I am not of the opinion that it is priced in, especially if you see the extent to which it's recovered, not too far from levels where it were early in December before all of this happened. So I'm of the opinion that we are going to get the downgrade, that we can't avoid it, that it's almost nothing that we do can avoid it.
Because it doesn't really have that much to do with politics.
Absolutely.
And like
politics just makes it worse. But even if we get all the politics sorted out,
it's about the economy and the rate of growth and the consequent fiscal collections.
Exactly. So my expectation is that towards the end of the year, we will be at least one ratings agency will have us on some investment grade.
Everyone was talking about this all of the time in January, and now it's like we forgot about that because the rand strengthened and we all sort of got complacent again.
Yes. And also because we had quite a successful international bond issuance. Successful in the sense that it was oversubscribed, but it was about 3 times the yields, or the prices, in other words, than the previous one that we did a couple of years back. So I don't think that it's actually such a great story at all. And if you are of the opinion that we are going to get the investment grade downgrade, then you don't want to be owning these ordinary government bonds.
Well, I was about to ask that. So in other words, people would own these because they're having a view on the likely trend in rates, or would they own these because it's a good way of accumulating value over time? And what's the interest specifically?
So clearly there's a bond market that trades also, and there are active bond traders that trade this. That's not what we're talking about here. This is more about part of a balanced fund portfolio. So not only having equities in your portfolio, but some bond exposure as well. And bonds are supposed to be the stabilizer, the more sort of lower risk exposure. December, I think, dispelled that myth quite convincingly, is that they can be as volatile as equities. And coming back to the total return idea, also bear in mind that if you are investing in bonds in order to get actual cash flow, yield, interest and so on, no, because you've got to go and sell units in order to get that interest payment as well. If you're wanting to for the reinvest your dividends or your interest payments that you get there, then it's great because it's automatically done
like
for you.
A charitable foundation or something that doesn't need the money, that's looking at a long-term strategy or something.
Yes, but a lower risk sort of investment.
But your point is, you're in all likelihood going to say this one's not hot because you're worried that there's been a complacency creeping back in with the possibility of the downgrade.
That's exactly my view, and I don't think that the bad news is sufficiently discounted in this, and therefore I'm not hot on the NFGOVI.
Excellent, good argument. I'll go not hot too, and that's a good learning experience as well.